Hi everyone, and welcome to the Backbase CXO LinkedIn Live series. Today we have a special edition as we're pretty excited to share with you a newly launched research report that we worked on together with Forrester. The context of the research, as well as the session for today, is all about the fact that we're living in the platform era where people expect their financial applications to be as seamless as watching their favorite show on Netflix, listening to their music on Spotify, or ordering food through Uber Eats. These changes in customer expectations, increased demand for financial wellness capabilities and tools, compounded by the fact that we've been living in a pandemic time, have basically been proven to be the perfect storm for the financial services disruption. Today, we're going to be diving deeper into what are these changes in customer expectations, plus what do banks actually need to do to make the leap and meet these expectations properly. With me today, I have a panel of 3 experts who will be diving deeper into this topic with me. So first of all, I'd like to introduce UBank Chief Information Officer, Manoranjan Sahu. Hey Mano. UBank is the first neobank in Vietnam, powered by incumbents FE Credit and VP Bank. They are planning a major release in September that will support digital money management. And the bank has ambitious plans to reach 5 million customers by the mark of 2025. Thanks for being with us today, Mano. Next up, we have Microsoft Director and Financial Services Industry Leader for APAC, Basudev Banerjee. He's an industry veteran with nearly 3 decades of experience in business transformation, consulting, and program implementation in the financial services industry. Thanks for joining us today, Basudev. And finally, we have Forrester Senior Analyst for APAC, Zijing Barry, whom we've partnered with closely to conduct a study titled State of Banking and Financial Wellness in Asia Pacific. The study has surveyed 1,000+ banking decision makers as well as retail consumers, where she's going to be sharing some interesting country-specific comparisons, examples of banks in your regions, and how they benchmark against fellow players. Good to meet you as well, Zijing. Thanks for joining.
Thanks for having me.
For this session today, what we're going to be doing is first we're going to be diving into the research results for the coming 10 minutes. Following that, we'll have a dialogue of around 20 minutes together with the expert panel that we have here today. And then we're going to have an interactive dialogue with all of you being online here today on LinkedIn Live. So first of all, Zijing, let's start by having a look at the research. What did it tell us?
Thanks, Tim. And good afternoon and good morning to everyone. I'm not sure if the slides are up yet, Tim. Thank you. And I think before we jump straight into the content for today's session, I'd like to give you a little bit of a historical perspective to PFM. And for many of you on the call today, it's not something new that you've heard about. So it has come a long way if we look at the history of PFM. And if you remember, let me take you back about 20 years. In 2001, Macquarie launched an aggregation using the tech portal tool from a US-based firm called Technology. And in 2008, ANZ Bank launched Money Manager, where they followed somewhat like a mint.com model with the aim of helping not just ANZ Bank customers, but also non-customers with the aim to monetize this type of model. However, it didn't fully capitalize and there was declining usage, and that's why the bank has stopped Money Manager in 2016. We have come quite a long way in these 20 years, where you see on this slide here that we're moving away from PFM to what we call digital money management. So digital money management includes not just budgeting savings, but also looks at forecasting, looks at automated financial advice, for instance, and it also looks at scenario planning. So you can imagine it has gone much broader than when we first started with just data visualizations or looking at just data categorization, for instance. Another thing to note here as well is that digital money management is not one technology that we're talking about, but it consists of a set of tools and technologies to get to the outcomes that you want to achieve for your own customers. And obviously that includes things like digital portfolio management, as well as business financial management. And if we move on to the next slide. And as Tim has mentioned, we conducted this study across Asia Pacific, We have APAC-wide insights here. We also looked into the country-level insights from this piece of study that we have. And what we're trying to find out here is to look at the state of the conditions of whether or not they are suitable for consumers to adopt these types of digital money management tools and how they perceive financial wellness, as well as how banks are responding to customer demands for financial wellness. And this is what we found. If you look at the chart on the left where you see somewhat like a traffic light indication here, what we found is that those consumers across Asia Pacific, those who feel comfortable and informed about their financial situation, they are also less likely to feel stressed out about their financial situation. And these are the consumers from countries such as Australia and New Zealand, from Singapore, as well as from Japan. So these consumers, they feel a lot more comfortable about their situation and less stressed out. The types of countries where we see consumers who are a lot more stressed out, they are not as comfortable, they don't feel as informed about their situation. They're mostly across the Southeast Asian region, from countries such as Vietnam, Malaysia, as well as the Philippines. And when we look at these countries as a whole, we see that there is quite a huge opportunity for banks to play a role to help these consumers feel a lot more informed and comfortable and less stressed out about their situation. However, banks are not top of mind for most consumers when they think about someone or a service provider whom they can reach out to for guidance. As you can see here, they are the third choice or the third option that comes to mind when they want someone to help them, with the exception of India, where banking mobile apps and websites are the top choice. And if we move on to the next slide, and we also find that there is a slight misalignment or mismatch or gap between what consumers want and what banks are prioritizing. As you can see here, consumers across Asia Pacific, they want to be able to check their credit score. They want to schedule some of the recurring bill payments, to aggregate their accounts, to look at subscription management. However, what banks are prioritizing, they are not quite close to what customers want. So consumers across Asia Pacific, they want account aggregation. But as you can see here, account aggregation is at the bottom of the list of what banks are prioritizing. Banks are looking at prioritizing subscription management, which is good because that's also what consumers want. So from here, what we can see is that there is a very strong demand from customers, from their banks, where they want banks to help them manage their payments, and at the same time to look at how they can help them aggregate these accounts. And if we move on to the next slide. However, when we ask banks in terms of how they are responding to consumer demands for financial wellness, there are still a number of very strong challenges that they face. There are barriers to what they can implement and what they can execute. And not surprisingly, the top challenge or the top barrier that we see here are legacy technologies or outdated type of technology. That's not surprising, because as we look at how banks should be able to execute or implement these types of digital money management tools, it gets a little bit difficult because the back-end system cannot keep up with the front-end experiences that they want to provide. So let's take, for instance, when we look at something such as account aggregation. At the heart of it all, in countries where we see open banking starting to advance and progress, at the heart of it all, it's the APIs that are driving such types of data information sharing and exchange. And without a modular architecture, it's almost impossible or very difficult for banks to deliver on such tools that they want to provide for their customers, not just to share data with third-party providers, but also to consume that data to give customers a more holistic view of their financial situation, not just with one bank, but across many different banks. The next two barriers that we see, that includes keeping pace with customers' evolving expectations and having a very in-depth understanding of how their needs are going to change over time. To be able to give something such as personalized recommendations that are contextual and relevant to that particular individual situation and circumstances, it is very difficult to do. Not only do banks need to know about their customers' financial situation currently, but also to predict what they are going to do according to their life stage and to understand what their intent is. So these are the multitude of challenges that we see that will be crucial for banks to overcome in order to provide for those types of digital money management tools or financial wellness outcomes for their customers. And I'll now pass it back on to Tim to take us through.
Perfect. Thanks for taking us through, Z, and super exciting to see the outcome of the research that we worked on together. So let's dissect it step by step. I think first of all, if I look at it from the helicopter Backbase view, it's very much in line with what we're seeing across the globe, across the 150 banks and credit unions that we're supporting with, let's say, our capabilities. And what we're seeing there is that certainly banks want to support the customers in their daily financial lives, right? That genuine desire is there. However, they're facing a set of challenges to actually be able to do so. So maybe let's dissect it together with the panel we have here today. And let me start with yourself, Z. What do you feel is the actual driver behind the fact that they are not meeting the customer expectation as you put it on the slide just now? Where on the left you see they're looking for a credit score, they're looking for setting up recurring bill pay. There's a few pretty basic capabilities, to be honest, that they're looking for. Whereas on the right, the banks are prioritizing completely different initiatives. What's happening there?
Mm-hmm. Yes, you're right to say that, Tim. And I think a lot of the foundational capabilities need to be in place before we talk about things like personalized recommendation or being able to give them more insights into what they should do. So let's take, for instance, a bank cannot give things like a budget alert if they don't already provide budgeting tools. Or a bank is not able to do spend analysis if they are not already identifying and helping customers categorize these spending transactions. So what we're seeing is that banks are looking to build these types of foundational capabilities before they then take the next step of telling customers what they should do and playing the role of some sort of a financial coach to them.
Yeah. So basically you're saying that they're looking at building foundational capabilities first of all, and that's why there's a misalignment. Is that correct?
Yes, I think that's also partly right. Another part of the picture as well is some banks, they have their hands tied when it comes to digital money management, because some of these capabilities, the level of complexity, the level of difficulty in execution is very difficult. If you remember, I talk about that legacy architecture and the technical limitations that are involved that require very deep integration of real-time digital money management capabilities into the core system. That's what they also struggle with. So some banks are looking to build the foundational capabilities before they get onto the next generation type of digital money management tools, whereas other banks are looking at, what is it that's feasible for our organization to roll out, and that's what they are focusing on.
Perfect, thanks. Moving to you, Basu, looking at your work in the region, what is your view on the discussion so far?
Yeah, it's pretty exciting, but one thing we should all remember this, that amongst the large traditional banks, there is no lack of intent to modernize their systems. There is lack of capabilities because they are managing too many things which are suddenly changed all over, right? This pandemic has exposed them from doing business in a completely different way and running their business in line with what the customers are looking for. So as Zing has correctly said, so the banks are stuck in a situation whether they would first modernize their back-end core systems, or they will go for the customer touching apps and the channels to modernize that. So banks which have mastered this alignment are doing wonderful in that space. Like banks like DBS, for example, is doing good, and they're the digital bank of the world for the last 3 years. But it's not the same thing for many banks, and that's where the challenge comes. The platform approach as well as the channels, and this is becoming super critical. And knowing that Asia Pacific is the fastest growth market for wealth management and personal finance, digital finance management business, banks have to focus more and more on that area. So we are seeing lots of tractions on the ground, lots of serious discussions and POCs, pilots, everything is happening on the tech space. across the whole region, across all sizes of banks.
Yeah. Yeah, thanks for sharing. I think if I listen to you correctly, then basically you're saying that over the past few decades, banks have been introducing more and more technology, which we would typically talk about as being silos. That's channel technology, that's core technology, basically a mixed bag, if you will, which then leads to broken experiences. It leads to a pretty legacy type of infrastructure that's heavy, it's hard to innovate with, it's very hard to stay agile, meaning you're just playing in that spaghetti versus trying to make an impact, which is challenging, which very much resonates with how we look at the world as Backbase, where we're basically saying that you need to take all of those systems of records, all of your existing infrastructure, if you will, and move that into the new world by putting a system of engagement on top of it. That's what you were alluding to as well, where if you properly re-architect a bank around the customer, and only then, by basically unlocking the technology that you have available, by putting a system of engagement on top of it, that's when you can start to be innovative and again become very relevant to the daily lives of your customers. And to that point, DBS is of course an incredible example over the past, 5 to 10 years. But we have more examples, of which one is actually in the phone call today. So moving over to Mano Ranjan. Your bank is the first neobank in Vietnam. You recently made a big investment. You went for the platform play together with ourselves, with Backbase. Would you be so kind to walk us through the journey? What are your current insights so far? You might have been muted.
Yeah. Thanks, team, for the nice introduction. UBank is the latest digital neobank in Vietnam, backed by APAC, the market leader in the consumer lending space, and BP Bank, the largest private sector bank in Vietnam. Our platform consists of Finacle as the core bank, Backbase as the mobile banking platform, and the CRM is provided by Concentrix, and KYC we do with Hyperwatch. All the platforms have been put in the AWS cloud, and we run a PaaS model, basically platform as a service, where the partner manages the application as well as the infrastructure. And for Finacle, we are the first ever 100% cloud implementation, and even for Backbase, we are the first implementation in Asia.
Yeah.
So recently, we have launched our platform where you have core banking, deposit, and payments now using the Backbase retail banking suite of applications. And this implementation was done in 5 months' time, where we have put good governance, proper tracking and management side. And obviously, scalable cloud architecture of AWS has helped keep the bank's worry out from the infrastructure as well as hardware components. We also have built interface with our local Vietnam partners, where we have Napas, then you have Payu, then you have Tutuka and other products, just to take care of the cash management, card management, and payment products. And now, shortly, we are going to launch the lending suite of products for us, which is sometime early next month. And future plan point of view, we are looking at interfacing with all the wallets and the payment products, so that we are the number one the payment player in Vietnam market. That is where you are in now.
Yeah. Thanks for sharing so far, Mano. I think what I'm hearing is an ambitious roadmap, and also hear that there's quite a, let's say, big road ahead in terms of new capabilities and services that you're going to be launching. I think also summarizing, you're basically a Backbase as a service customer, where you're leveraging our infrastructure, our platform, to orchestrate all the capabilities from, let's say, your current ecosystem into one single platform powering your applications, correct?
Yes, absolutely. Even the lending also, whatever announcement going on, which will go live shortly, has been built on Backbase platform.
Yeah, incredible. I also hear that around 50 new features are being released so far. Is that a ballpark number that you have in mind thus far?
We'll have more than that.
Even more, that's great. So I think the conclusion so far is that Mano is in this journey. He went into the platform play and supporting that throughout the UBank journey with Backbase. It's a big leap. It really takes quite some bravery, I would say, to make the complete switch. But as you can tell, if you listen to the story so far, it is paying off. There's good speed, there's a lot of capability, and it basically allows UBank to be very close to the customer expectations in the market. Moving on to Z. if banks successfully make this transition that Mano was also describing just yet, what is the value that this concept of digital money management actually bring to the table? And could you share some specific examples, perhaps?
Sure, Tim. So at Forrester, we do this annual digital experience review, and we looked at a number of banks across Asia Pacific, and there are a couple of categories there. And digital money management is one of the main categories that we looked at in order to see how well banks serve their customers. And one of the banks that is consistently top of our review is the Commonwealth Bank of Australia, where they not only excel in user experience and the functionality, but also around digital money management. And I think a lot of the banks or the clients whom we work with, they always ask me this, which is, what sort of benefits can we get from digital money management? So what the Commonwealth Bank has done is that they have looked at ways to help their customers. They have something called the Benefits Finder, where they help customers look at the rebates or any benefits that they can get to help them in their own financial situation. So for instance, over the COVID period, they have looked at dispersing about $481 million worth of rebates and benefits on their app itself. And some of these benefits include things like pandemic leave, disaster payments, or looking at the SME small business type of loan from the government. They also looked at Dine and Discover vouchers, where the government has handed out vouchers to consumers so that they can encourage them to dine at different restaurants. So if you think about the $481 million worth of rebates and benefits that have been claimed through the Commonwealth Bank's app, then you can think about the usage level and the adoption level and the engagement level through these mobile apps. So that's one of the biggest business benefits and customer benefits that we see from digital money management. So the bank actually increased their app users from 5.6 million to 6.4 million customers. They also noticed in the month of December 2020, there were almost 7 million app logins per day. And if you look at the mobile app NPS, it is the highest amongst all the banks in Australia. It is at 37.6. And the average is between 20 and 30. So I think these are some of the business benefits that we're seeing from banks that are doing well and delivering the value to their customers.
Yeah. See, could you tell us maybe a little bit more also about how does this relate to disruptors in the market? Because of course you have market entrants like Apple, Grab, Line, and others. What do you see there in terms of performance indicators?
Yeah. So if I take an example such as, someone like Monzo, right? Monzo in the UK, where they have really done quite a lot in that personalization and money management side of things. So Monzo came into the market and they didn't have, they're trying to break into the market. They are trying to build up that market share. And we saw that, through the year of 2020, they increased their market share from 13.8% to really looking at how they can move that to 18.1%. And we saw that increase during that whole 2020 period. And if we look at their NPS, it's at 72. Just to give you a sense of how good that is, the next closest bank's NPS is at 14. So we do see that some of these disruptors, they have come into the market within a very short period of time, able to deliver that type of compelling experiences and increasing their market share through that.
Yeah. Very clear. If I'm, let's say, going along that line a little bit further, if you look at a player like Apple, how is their performance being compared to the banks in the specific region we're talking about today, the Asia Pacific?
So if we look at Apple Pay, especially, a lot of consumers have started to use Apple Pay for a lot of their digital contactless payments across the region. And that's something that we're closely looking at. And of course, it's not just Apple, right? It's also other providers such as Afterpay or Klarna in the region, the buy now, pay later type of propositions that we're slowly starting to see. And if I look at someone like Afterpay, they're not just a buy now, pay later provider anymore. They are also looking to provide banking services. And with their established base of customers, that's something that we see to be very compelling, where they can then start to embed all these banking services for their own customers.
Yeah. Yeah, so it's effectively a wave of, let's say, big tech entering the market, fintech entering the market. You see it everywhere. You see it in Asia Pacific, but also certainly in all the other regions. If you look at it from a Backbase perspective, what we're seeing in the market as well is that at the end of the day, it's about the battle for the preferred app. So who in the market, in the region, in this particular domain, whether it's a vertical or a certain product space that they're operating in, who is going to be the player that's next to the favorite application of the consumer? So that basically you capture their daily financial activity because you are the choice, right? You have this higher NPS of, I think it was 72 just now, which is incredibly high. It basically means that the next in line with a score of 14 has no game to play, right? The preferred app is clearly Monzo in this example. So as Backbase, we do see that there's a clear competition out there. There's pressure from all these different angles, big tech, fintech, incumbents that are making a leap or properly transformed banks by now. And they're all fighting the battle for becoming the preferred app. I personally don't believe there's a winners take all type of moment, but there's certainly going to be a, let's say, rationalization. There's a few players that really dominate the market. And the names that you mentioned so far and what we're discussing, they are all predominantly platform players. So that's something we will dive a bit deeper in the coming few minutes as well. Okay, Basu, do you think that the digital money management tools that are currently in the market in APAC, do you feel they are competitive enough given the discussion we just had?
Honest answer is definitely no, because if you look two different segments, one is the traditional banks, and they're, as he said correctly, they're stuck with the legacy and the whole old age platforms, and compare them with platforms like Grab and other e-commerce players who are very soon going to start digital finance platform. Their agility, their capability to drive new products, new services quickly and bringing the whole ecosystem together is massive, massive. And we are seeing that the way the Grab quickly launched the Grab Invest, and they're quickly gathering customers for the micro investment size. So that speaks a lot about what the super apps and the platforms going to play. So in APAC, the market is wide open now, while the super apps and the marketplace players are definitely having an edge. Traditional banks are also trying to catch up. They are in a catch-up mode coming out of their legacy to address the same market. The size of the market in APAC is huge. We are talking about a private wealth services or digital finance management of $32 to $35 billion by 2025. And markets like Indonesia, Philippines, Thailand, Vietnam, Malaysia, these are like super growth markets for this digital finance or personal finance space. So that's where banks are also realizing they need to do a lot. And that's where this whole agile modern platform like what Backbase brings onto the table is becoming super critical for them.
Yeah. So Basu, you triggered me on one word. You said banks are catching up. And I believe there's a lot of catching up to do. But I think we also concluded partially that it might be a moving target because they don't have the foundations just yet in place. They're still struggling with their legacy context. So that catching up metaphor, could you translate that into a measurement? Like how will banks know if they are keeping up, yes or no? What are the types of metrics that you would be looking at as an incumbent bank trying to make that leap?
Just see how much as the bank is able to capture the, first of all, they are laggards in the embedded wealth management space. The new word is embedded wealth when you're trying to serve customers with a different key product, but underlying there is a wealth or the personal finance management products. We don't have many such products available by the banks today, but they are trying to define those products. But the super apps, the e-commerce players like Mano, Ubank, they're all offering those kind of, because they come from that ecosystem. Now, to kickstart the whole thing, the banks needs an agile and robust platform to start. So it is not how to start, it is when to start. They need to start now. And that's where we are seeing banks are trying to do this. Many of them have started this journey. Many of them are looking for modernized platforms like Backbase and many other few others available in the market, not necessarily as mature like Backbase, to see where and how soon they can kickstart the whole engagement. But it is happening. As we speak, it is happening all across the board, starting from the smaller banks to the large traditional banks.
Yeah, absolutely. Bringing it over to Mano, you're of course a new player in the market, as we shared so far with Ubank. how does it trigger you if we're talking about these topics of big tech entering, fintech entering, actually not entering, already having an incredible traction on the market? Does it make you nervous? What's the zeitgeist?
Okay, I started my career in Citibank India, where we were always the first to launch the product in the industry. And if you look at early 2000, in India, we launched the first internet banking. In 2001, we launched the first ever global web-based platform servicing the NRI customers, the NRI basically non-resident Indian customers. So we used to have beautiful products, just like Suvidha for the bank at work customers, Ready Credit for the loans for the salaried customers, Home Credit, which is the mortgage product where customer can park some fund for short duration. So we are good at product, we are good at technology. We always used to use the latest technology. And we are always the best in the industry that time. But if you see last 5 to 7 years, most of the traditional banks have lost the race. They have too many hierarchy, too many silos. Even to do a small project, they require $1 million. On the other side, you can look at fintechs. They have the people where they can do in a smaller scale and with a lower cost than build the same product, and they can implement the product with a very short time frame. And it's true what you mentioned that big players like Apple, Google, and Facebook, they have tons of money. They are also eyeing the banking space. But let's look at the history. Any company or any organization who has a good product and they understand what the customer needs, they are always successful. So we are not worried. So UBank has the best product available in the industry, and we are targeting the right segment of the customer, will be definitely successful. So we are not worried about the other players.
Got it. Perfect. Thanks for sharing. All right, moving back to Z. We talked about a lot of the different challenges that banks need to overcome to actually meet the customer where they're looking to be met in terms of expectations. Perhaps you can summarize what the recommendations are also from the study, the research that we launched just now. What are the key recommendations for banks to make a move on?
Yeah, I think it's very important to look at, I think when banks are looking to launch these types of digital money management tools is to set the type of expectations of which types of customers and personas and segments whom they want to serve and what types of tools they want to give them. And also to set the types of success metrics from these initiatives, because what we have seen typically is a lot of these initiatives in the past, they went out and they had huge expectations of who's going to use it, but then the adoption levels don't quite match up to that. And also to remember that it is a process of iteration. It's not that you build a budgeting tool and then you let it sit and then you wait for another 6-12 months before you think about making any changes to that. So if you look at what and if you remember what we talked about in terms of those who feel stressed, anxious, and comfortable and informed early on during the presentation, to really understand who are some of your customers that what we call as, are they carefree spenders? Are they also the stretched spenders that they live paycheck to paycheck and they feel anxious about their financial situation? So these are the segments of customers whom then, you would be able to provide budgeting and savings tools, help them plan for their daily expenses, and so on and so forth. And then for those customers whom we call security seekers, they don't feel anxious about, they feel anxious about their financial situation, but they don't live paycheck to paycheck. They're looking at the medium to long-term types of financial goals. And that includes things like being able to retire comfortably, being able to invest in different types of portfolios. That's the wealth management bit that they would be most focused on. So really looking at how do you then personalize these tools to the right audience. And in order to do that, it's all the data and insights that are powering such interactions. So my advice will be to not, if you're just starting out, you don't need to go with the big bang. Start with the small tools and establish and show that you have results from it and get buy-in from the broader organization before you go on to the more what we call the next generation or the higher level types of tools that include things like personalized recommendations, because that's a little bit harder to do.
Yeah, clear. Now let's summarize this part of the session for now. What I'm hearing so far is that the consumer expectations are out there. They're pretty clear. Researches like these actually nicely create a list of types of capabilities that end users are looking for. To actually match that, to make sure to have an impact there, to be able to deliver those types of capabilities, what I'm hearing of the discussion today is the fact that you need your foundational work to be in place. And that foundational work we would call a unified platform approach. So basically, if you, let's say, go into a helicopter and look at the bigger picture, for the past few decades, you see banks building out siloed infrastructure that basically deliver broken experiences, not allowing you to be agile, not allowing you to push, let's say, innovative capabilities that basically allow you to help the customer in their daily life. That's, let's say, the old answer to the same question. What we're now concluding here in the chat today is that you need to pivot your thinking into platform thinking, where you put an engagement system on top of all of your systems of record, which allows you to re-architect your bank around your customer. And in doing so, that's when these types of research data points become incredibly valuable, because it allows you to build a value roadmap. Like, what's the actual value we can bring to the table for our end user that they will indeed adopt because it's solving a certain issue for them. That type of thinking is completely in line with how Backbase approaches the market and approaches these challenges, helps challengers like Ubank be successful on our Backbase as a service offering. And on top of that, of course, you also see a whole mix of services that we basically bring to the market to help you be successful. So the things I'm talking about, like moving from left to the right, from the old school legacy thinking to platform thinking, we provide consulting services to help you basically understand what that means, what the impact is, and how you build out these types of value roadmap exercises to make an impact, and start small, right? That's also the takeaway I hear from Z here today. Try to start small in a space where you can be successful, that you do have a quick win, and grow larger from there. Again, with the Backbase engagement banking platform, once you put it in place, you can indeed focus on one specific, let's say, beachhead in your complete offering and grow and expand from there as you go along. It's quite a nice journey you can step into. Now let's move to the live Q&A, because of course this is a live LinkedIn series session, whereas we are taking questions from the audience, which I will share with the group here that we have, whereas we already have one question to begin with. And that's from Randy from Vietnam, who asked, actually made a statement, very informative session. Will Backbase make the full report available after the session? Absolutely. To be even more specific, it is already live on the Backbase website, and we've shared the report through our LinkedIn account as well, where you can click the link and download the report and basically go into the details from there. I hope that helps. Then the next question is from Edwin from Singapore. And he basically shares the question, it would be interesting to know how traditional banks are now playing catch up, especially around getting more data on customer lifecycle and interests. Any thoughts and observations from the speakers? Maybe Z, you want to take this one first?
Yeah, I think as I said before, what's very important when it comes to digital money management is the type of data that you would gather from your customers, right? So maybe one way that I will answer it is to look at what sort of data that you need to collect in order to personalize that type of interactions. An example I can give you is Westpac, which is a bank in Australia. They noticed that their customers have changed their address. So one of the assumptions there is they have moved house. That's why their address has changed. And what they have then decided to do is to look at what are some of the things that this customer might need. And they saw that a couple of those transactions included looking at buying new furniture or new appliances. So what they did was they then surfaced a personalized recommendation for a card that this customer can use in order to get savings on any types of furniture appliance type of purchases that they have. So this is a card that is very specific and relevant to that customer based on that one data point of them changing the address. So they have done that quite well. Obviously, there are a lot of assumptions in place, and it has to go through a couple rounds of iteration to then understand whether or not this particular customer is actually wanting to buy new stuff and whether they have moved into a new house, for instance. Another way for you to look at it is if you know that you need to understand the life stage of your particular customer. And if you know that this customer has been, saving up for something and they have been they have created a budget, which is to buy a new house. and they've put money into that, how do you then help them achieve that goal of putting money into that particular home saving goal that they have? So a couple of the banks that we've seen, for instance, in Canada, RBC, where they help to identify spare cash for them to put into the savings buckets that they have, and essentially to get to the goals that they want to. So it is to look at, how they interact with you, what sort of, if you already have these tools, what sort of goals that they are setting, and then to personalize the types of services or the types of products that you have for them to help them achieve those goals.
Perfect. Thanks, Z. Moving on to a related question from Paz in Manila from ING Bank. One of the major challenges for providing customized personal products would be around data privacy and the privacy appetite of customers. Is security/privacy a barrier to digitally transforming? Maybe a nice question for Basu.
Yeah, it's very valid question indeed. One side of it is seeing it as a barrier, private and personal information. But I think technologically, the companies, whether it is Ubank, who are the user of the technology, Backbase, who are also providing the platform, and say Microsoft, who's providing the infrastructure services or the cloud services, every layer of this is well protected, well secured, and privacy data is well taken care of. Unless you understand the customer's transaction behaviors and his search behaviors, it is very difficult to provide focused attention and a focused offering to that customer. So what Z was talking about, we define in Microsoft that as a digital feedback loop, where the customer's preferences and transaction behaviors comes back to the system through the channels. And then the systems are agile enough to update and modernize and provide back the updated level of information and services to the customers. And in this whole process, every layer of security is enabled to protect the privacy and the customer private PII data, as we call it. So I don't see a major risk. There is a concern. There is a mindset that this data may get stolen. We have seen in recent past some of those activities, but every technology company is working today to protect this data, whether it is data in rest, data in transit, or in every format of the data. So it will be a challenge, but we are seeing that people are overcoming it very quickly.
Clear. Mano, perhaps from your side, any concern on the privacy side?
Yeah, see, customer data is very important. And not only its customer, but also the regulators have become very strict day by day. So any data breach, banks are penalized heavily. But we have enough tools available in the industry who takes care of the data privacy. And when customer doing transactions with some e-commerce site, third-party transactions, we always protect the customer data as much as possible. And then there is no breach at all on the site. So even though it's a critical, important topic, but banks take care of things pretty well. No need to worry about that.
Perfect. Nothing to worry about. Thanks for sharing. All right, then we move on for a question from Ridi in India. I want to ask Basu from Microsoft, as a large technology and cloud solutions provider, where do you see Microsoft adding more value to propositions around digital money management / PFM that something like Backbase provides? So basically, what added value can Microsoft add on top of an offering like Backbase?
Yes. So one is providing the whole cloud services as the underlying, which Backbase and Microsoft has come into a strategic partnership globally. So that's one side of it. Definitely, this partnership is very, very important and helps both the organizations to drive business. The other side of it, Microsoft over the years we run the biggest software as a service platform in the world. Many people don't know this, a whole modern workplace platform, right? And we have one of the largest Active Directory construct in the world. So we understand with our cyber security team and all how the whole security paraphernalia is structured today. And that's where for all these digital entities and platform providers like Backbase, we bring in complementarity on the security side of it, the data and analytics side of it, and also the whole cognitive services side of it, the whole AI, ML side of it. And that's where we complement all our strategic partners like Backbase. And we see a great potential into this personal financial services, personal finance management space, digital finance management space.
Clear. Okay, then we move on to Kashagra from India. Insightful session. can you please let us know, as a new bank, what should be the roadmap to start? It's like the $1 million question. Where do you start if you need to move into this new paradigm? Maybe Mano, you want to share from your own personal experience briefly? Where did you start?
See, it's basically first you have to discuss and find out what is the customer segment you are targeting at. And obviously it comes with a platform. And you have to plan which platform you are going to put across. And we are not into the old days where the infrastructure is placed in-house and you have a on-premise data center, all this stuff. Everything is a cloud now. So get the right cloud partner, get the right platform selected, then you start targeting the customer segment you're looking at. And every customer segment has need of working closely with them, and they want the latest technology. They want the consumer more close to the bank to offer products which is more close to them. And we have AI analytics, everything available. You can always find out what the customer needs and target the customer segment.
Perfect. That's quite some nice guidance already. For those in the audience, and especially for the person sharing the question, if you need support, or if you want to get key insights from the Backbase experts, we have a service called Strategy Consulting, where we basically take you by the hand and take you into the journey on understanding what is your go-to-market, what is your vision for the bank, how does your business model operate, and how does it actually sit within the specific region that you're looking to target. We call this value roadmap creation. We call it strategic consulting, delivering ROI overviews, creating business cases. So feel very free to reach out to your contact at Backbase to see if we can engage in such an activity. Okay, moving on to Yasser from Mozambique. Which platform or banking system do you look up to? Or in other words, who are the favorites out there in the APAC region that stand out for them being successfully in this new era? Mano, any perspective there?
Okay, so if you look at the mobile banking platform, obviously I can say Backbase is the best product available in the region now. I have seen multiple products. And if you look at the core banking platform, we have for digital bank, Mambo can be used. You can use Finacle, which is a full cloud now. We have FlexQ from the Oracle sales available. So these are the platforms which can be used if someone is starting afresh. But if it is a traditional bank who are looking for various products to start a digital customer journey, so they require a product where they have a old days backend technology, they require a high-end digital technology, and in between one layer to support connect both of them. And if there are a lot of products available, like API management, MuleSoft available, who have a good full-fledged API management product which can connect the digital platform to the backend. Similarly, so if it is a traditional bank, I can suggest Backbase as the front end, MuleSoft as the API, and the core banking platform, maybe any of the existing traditional or Finacle or FlexQ can be taken up.
Wonderful. Thanks for sharing, Mano. Moving on to a question from Nakul from India. We're having quite a nice journey across the region here this afternoon. What challenges do you face in attracting new customers? I think it's a great question because for us it's a real space on its own. We call it digital sales, which is all about account opening, customer onboarding, cross and upselling, digital lending, for instance. Quite a challenging space often. Basu, what is your perspective on the challenges there?
Good question, Nakul, firstly. Nakul, I'm assuming because you're in India, you may have used Paytm at some point in time. So for all the digital banks, the challenge starts with converting, if they have come from the wallet side of the business, converting the wallet customers into the bank customers. Because wallets are basically to meet your transactional needs, pay from A to B. But when you're talking about a banking service, the first thing which comes in mind, everybody's mind as individual, is the trust factor. How much trust I can put onto this new digital bank or digital entity with my money, right? So that's where, when in India, some of these wallet companies started transferring their license to a small finance bank or the payments bank mostly, they had seen some erosion of customers. That's the biggest challenge. And as Manu has nicely pointed out, the first important point for a digital bank or similar kind of entity is to identify which target customer segment I'm best suited for, right? No point approaching Gen X, Gen Y, Gen Z, and the post-retirement people all the segments, which are typically approached by all the traditional banks because they have customer segments all across all the age groups. So identifying whether the digital bank is going to be a purpose-driven bank, like banks which are into trade finance, which are into payments, which are into settlements, or it's a consumer segment-driven bank. That's very important. And that's the first challenge. And that's where I've seen Backbase's research work, when they help the banks to identify the target consumer segment or customer segment, and also help with a lot of tools to create those customer journeys, which finally will be on the platform. So you need to match all these stories together, your customer profile, the segment of the customer, their typical customer life journeys, and how this can be put and mapped to a platform which will support them in their whole end-to-end customer journey. So these are all the challenges which we see, and we have seen in the past. It's nothing new. We are seeing this for the last 3-4 years.
Great, thanks. Then we have another question here which states, why should banks work with fintech partners instead of building their own technology stack? I'd like you to comment on that, Mano. I see you nodding already and smiling.
See, yeah, I have been traditional in the banks where we used to have always in-house big development shops. But if you look at the challenges what the banks face by having in-house development, that it's very costly, we require a long time frame, and you require huge talent pool of people. And you have to continuously upgrade yourself to the latest tech stacks available in the industry. And in IT of a bank, difficult to keep the talent if you are not working on the latest tech stacks. People always want to work on the latest technology. They want to go outside and work. So all these 3 challenges is very critical for a in-house technology division in a bank. But if I look at a fintech partner, they can deliver the product with a lower cost with the latest technology. So it is a no-brainer. Why should I put so much money and effort, energy, and do something in-house, which is not sustainable? Rather work with the fintech partner and get the product regularly from them.
Exactly. And also to add is, sorry team if I may, it's also to add is from a generalized approach, which as I said, the banks adopts typically, to a specialized approach, because fintechs are very focused. When they started their journey, they were focusing to a particular segment, particular business, particular product, whether it is wallet, digital bank. So they have that niche capability which the large organizations lack. So bridging this together is actually complementary to each other than competition. And that's why we see banks, any bank in the region, large banks, they are trying to be more having a partnership with fintechs rather than just competing with them.
Yeah, certainly. Thanks. Z, how do traditional banks work or compete with fintech vendors that offer banking as a service, which are more API focused? Yeah, that's the question indeed.
Sorry, can you say that question again? So
yeah,
how do
absolutely.
banks which have banking?
The question was changed on the screen a little bit, but how do traditional banks either work, so partner, or compete with fintech vendors that are offering banking as a service capabilities through APIs? So basically those fintechs that are providing also more core and ledger focused services and processing services that might as well be in the space of an incumbent institution.
I think there are a couple of things there. So for incumbent banks, obviously they've been in the banking business for a while, and they are able to then leverage some of their unique capabilities. And if we think about what a bank is good at, right, there are many components where we see that they are quite capable of doing and where they differentiate. If we look at areas such as risk, if we look at things such as compliance, if we look at things such as looking at underwriting, for instance, or origination as a service, or looking at all the different types of capabilities that a bank can then put into as a service type of capabilities for other providers who might become a bank, for instance. So I did talk about Afterpay earlier, and Afterpay is actually using Westpac and also looking at using Westpac Banking as a service platform to go to market as well. So it is to leverage the capabilities that an incumbent bank has, and then to go to market that way. I look at Asia Pacific, where Standard Chartered's Nexus has also those types of capabilities to enable an e-commerce firm to then go to market. So I think banks, incumbent banks especially, have a very unique position in a way because they understand what's most difficult in financial services. And what we always talk about, and I'm sure if you're from a bank yourself, is the regulations that are in place. It's a very heavily regulated market, and banks know how to navigate these types of regulations. So I think that's one strength that incumbent banks have. As for fintechs that are looking at building their banking as a service capabilities, they are known to be more agile, more nimble. They're all built on the cloud natively. So they are seen to move faster and be able to develop capabilities a lot faster than the incumbent banks. And what they offer could be quite different in the sense that they could, get up to speed or can co-innovate much quicker than an incumbent bank. So the way I would see it is the main difference between these two parties is that one is very good at navigating that whole regulations piece. The other is a lot better in going faster to market, speed to market, and to co-innovate in that sense.
Great,
So,
thanks.
Tim, just to add up, in Monetary Authority of Singapore, MAS, who is the regulatory authority of banking in Singapore, they have put a platform called APA Exchange, where all the fintechs in the region are linked up. Now the banks can come give their problem statement in the platform. Now fintechs find out the problem statement, go back, reach out to the bank that this is the solution they're offering. So that's a bridge between the fintech and the banks working on. That's a beautiful step where we can see banks are started utilizing more and more fintechs. Instead of competing with each other, maybe fintech can work for a bank and one small fintech work for 5 banks, then they also made their product journey, correct?
Yeah, exactly. All right, moving to the final few questions before we go to the key takeaway. And there's a question for Mano. And the question is as following. Given the intense competition for neobanks in Vietnam, where do you see UBank standing out from the rest? And would PFM/digital money management help differentiate UBank from the competition?
Okay, so if you look at the neobank space, we are the first digital neobank in Vietnam. There may be some new banks coming up, but end of the day, it's a product. So we have the best product available in the industry, and obviously this customer segment we are targeting. So we know who are our customer segments, and we are targeting them, and we are moving really fast. And we have a target of getting 5 million customers in next 3 years, so which is really good, and we are working at right pace. I don't think we have to worry about the competition at all there. And this PFM or digital money management is a good idea. There where we are focusing a lot fully on the side, and all our products are into fully digital money management. As I mentioned a little before, we are interfacing with all the wallets and the payment players in Vietnam, so that we are the biggest payment product there available in the industry there. So this is the next step to go. Even though I can see a lot of cash transactions happening in Vietnam, unlike other countries. So slowly you are moving into the digital space.
Great. All right, ladies and gentlemen, that brings us to the end of the LinkedIn Live series for today. In order to wrap up, I would like to ask the panelists to basically have one key takeaway that you would like to share with the audience as a key takeaway for today. Maybe you want to go first, Basu.
Go for the platform approach, which provides you agility and scalability. So select the platform judiciously, which is capable of integrating multiple APIs, which is capable of running data and insights inside, which can provide a comprehensive view of the customer. So all about the platform. Selection of the platform is super critical.
Mano.
Think about the product first. If you have a good product, definitely you will get success, and keep yourself in the customer's shoe. As a customer, if you reach out to the bank, what do you expect delivered to the same to the customer? Obviously, you will stay on the top of the world.
Great. And Z?
I would say iterate. Digital money management to succeed, it's both an art and a science. It's not just about the data that you have, but it's about also understanding behavioral economics and what sort of value you bring to your customers. So always, like what Basu has said before as well, that digital feedback loop, always iterate and learn from that.
Great. So basically to wrap up for today, using the statements that were just shared by our expert panel, it's all about being extremely customer focused, making sure that you really drive the expectations that they have and deliver on those capabilities. iterate, 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 learn, really look at the unit economics and the data. And in order to do so successfully, you have to move your thinking from the old school siloed legacy type of infrastructure into the new world of thinking, which is platform-based. You need to go for a unified platform where you can basically orchestrate all the value from your existing infrastructure, add on top fintech capabilities if needed, which allows you to then drive incredible applications on the front end, of course, across all the different channels. Having said that, that wraps it up for today. Basu, Mano, Z, thanks for sharing all of your insights and being available for this LinkedIn Live series here today. And having said that, if there's any final few questions that are on the channel, we will reach out, we will share our insight if still outstanding. But having said that, I would say thanks for now and see you on the next edition.